I was checking how these videos have been progressing on YouTube and how you guys have been accepting this, the comments that I've been getting. We don't get a lot of views here. I do understand that's normally what happens to valuable stuff, right? And I really get it. I really get it, believe me. Welcome to part 5. I skipped a day because I wanted to do some statistics to check if it is really worth it, if I should really continue with this series. But even if it get views or it doesn't get views, I am going to upload these videos on YouTube for the sake of those who really come after me. So yes, let us continue straight to part 5. Before we go to part 5, I would like to show you guys something. I have right here with me structural low, then a structural high. Then I spoke about the last green candle before a drop, and if we strike a line right there, that's where we heard this nicely done, carefully measured entry. We took it right there. I took the first entry right here, took it right there, and I'm going to share with you guys. I'm gonna try. I don't know how they actually do it, but I will try to do this. How do they do it? I'll try to do this. Yes. So I just took this trade with the students. Not the students, actually. These are not the students. These are signal follows. So we just took this buy right there, and right there, if you can see it, and it traded all the way up, which was a perfect entry. So this also validates the information that I'm giving you guys on a daily basis. I don't want us to have a situation whereby you only know when I'm saying it. And for those who really want to join this classes, or who want to join my free services, everything is free, nothing is charged right here. I will leave the link in the description. So let's go to the next chapter of what we're actually supposed to be studying. We spoke about the structure, we spoke about the last candle before the drop, we spoke about the invalidation, and we spoke about retest. Today I'm going to talk about a concept that is spoken about a lot by everyone, but it is not really shared the way I actually feel satisfied. I will try to explain it my own way. I will avoid using terms that may get these videos banned by YouTube algorithm. So let's go. Let's assume we have a company called Orange, and this company creates it's a mobile company called Orange, and it created its first mobile, and it's selling for 15 USD. Right, there's a company called Orange, it sells its mobile for 15 USD, and people are buying this mobile right here. People are content, people are happy, people are satisfied, and orders are being fired. They're buying at all cost. Now, because of this buying, because of the price and because of the product, it's new and everyone wants it and people are crashing on it, it's crashing the market. There is high demand on this product, this Orange mobile. So this Orange company decides to hike its prices all the way to 100, for example. Right now, when they did this, the orders are no longer as buying as they were, or there is now a difference in terms of purchase rate and price rate, or that demand that was firing up at 15 is no longer the same when it comes to 100. The reason for that is there is a gap, there is a difference. They skipped from 16 all the way to 99. So this price difference right here, what are they gonna do? It's either they're gonna have to endure the fact that they stick at 100 and not a lot of purchases, or they go back to 15 where the demand is too high and they may not be able to meet that demand. Their supply might not be able to meet that demand. So how are they gonna handle that issue? The best way that this Orange mobile can do is to create a fair price that that is going to be an equilibrium price between the purchase rate and the price rate. So what are they going to do? They're going to drop until they meet a certain value. They're going to drop until they meet a certain value, which is in line with the demand, the purchase, and the price. So whatever they are doing here, they're actually filling a gap. What gap are we talking about? We are talking about a gap from 16 all the way to 99. I believe you know the gap that I'm talking about, normally known as the fair value gap. So that's what they are doing. We are looking for a fair value whereby the price is actually fair and it is in line with the demand and the purchasing rate, right? So what's a fair value gap? It's this gap between 16 and 99. This is the optimum way that I have of explaining this. So whatever they're gonna do right here is gonna determine how their sales are gonna be. So let's try to look into that, and I will try to like explain why am I saying this, why am I talking about this, where is this coming from, and all that stuff. So we're gonna focus on two sides of it. Let's look into this downtrend right here, a perfect downtrend. Why do I call it, or do I consider it a perfect downtrend? I see high right there, I see a low right there, I see a lower high, I see a lower low, I see a lower high, I see a lower low. And I will repeat what I said in the very first video. Whatever that we're gonna do here, we are not doing it to become the best traders in the world. We are doing this to be able to take trades that actually take profit and withdraw and leave. This is all we are doing. No weird terms, no scary stuff, no weird terms. First of all, because they can get our video banned by the YouTube algorithm. Second, it's because that's what we are looking for. That's what we are here for. We're just looking into things that have anything to do with the market structure. Everything that I speak about in 2025 should be related to the market structure, because I learned from my experience that whatever that I do, as long as I'm in sync with the market structure, we are good. So let's look into things the way we spoke about last time. We have structural high, the green candle right here, we have it. Then we have structural high, low. So as long as price keep taking down the lows in this way, it means we still have hopes of market price coming back. Now we have the last black candle before they pull down. What do we call it? The invalidation. Let's take it, and right there we have another entry right there. Perfect. And where we're heading to? We're heading all the way down. As long as we still have this, it means we are still good to go. The last black candle before the green pull down, we have, before the highest high. If you didn't watch this, I advise you go to video part number 2, because this is just a recap. And right here is where we are. It comes back, but then I want us to pay very close attention to something. Still on the structure, we are just studying the structure, no strategy, nothing. I'm not sharing where to enter, I'm not sharing where to exit, I'm not sharing any weird stuff. We are just studying structure together, which is something that we should have done when we actually began looking into things. But we are doing it now. It's better never. It's better late than never. Pretty cool. Let's look at something. Look at the way price has been closing below the lows, and the way market has been closing above the highs, right? Because we could look into this and say, okay, this is also a breaking structure. Yes, of course it is. It's a breaking that we have a higher high, but look at the difference in terms of break. There is a solid break right here. Then there is just a swipe right here. Stop hunt, I would want to consider it maybe just a stop run. We have a solid break right here. But now, talking about this low right here, of course it is a lower low, but in terms of the way it's breaking, it's not a similar way as it was, or as it has been happening before. Look at the way this breaks, look at the way this breaks, look at the way this breaks. Now look at the way this breaks, completely different. Why? Because now this has changed to just being one of the stop runs. I want to see price breaking lows, the lows that I said if we keep seeing lows being broken, we still have hopes. This is not a break that's giving me hope. This is a break that is telling me another message of a stop run. Okay, fine, perfect. Now let's go back to the orange company and the gaps that we're talking about. The gaps that we are talking about is the distance between the trading period of this candle right here and this candle right here. There is something about the indifference of price from here all the way up to here. So right here we have a certain gap that we need to pay very close attention to. If we also look into things we see right here, and that gap always have to come back to be renegotiated. Let's do this. And that gap always come back to be renegotiated. If we also look into this range right here, you'd see all the way from here up to here, and we see that gap again being renegotiated before price actually drops lower. So now what do we have? If we pay attention to part 1, part 2, part 3, part 4, I believe this is part 5. I always lose tracks of these numbers. We now see that first we spoke about the flip zone, which was a perfect entry, but of course we agreed that we could take a sell entry at the flip and target the previous low on a downtrend, but we would have to endure all of this. But with the concept of these gaps that I'm bringing in today, we're actually tightening our entry. And as we drop to lower time frames and lower time frames and lower time frames, as we drop lower in terms of time frames, we're actually tightening our entry, tightening our lowering our risk, tightening our stop losses. Now our entry is no longer at the flip zone as we used to say, or as we said in the previous video. It's now at the gaps that I'm speaking about. I'll show you again when it comes to an uptrend. We have it right here. We have a high right there. Market strikes that high. The type of break that I like, a solid break which looks like this, which does not look like a stop run, but which actually looks where a whole candle closes above and the whole candle is actually formed above that. This is a break. It's not any break. It's not just one of the breaks. We see it right here. And we have market coming back. Of course, we may have failed to trade right inside of this block right here when it comes, if we are actually to be considering bodies of the candles. But look at that gap again, and we have it right here. Remember, guys, what we are doing? We're not losing focus. We are simply studying the structure. No entries, no exit. If you continue with this series, as you are, I see you guys are taking this series as much as you possibly can, and I'm happy these videos are making a difference to you. You may subscribe to the channel. You don't pay for that, it's free. You may leave a comment if you have a question, if there's a part that you don't understand. I have a link that is that I'm gonna leave in the description below, and if you get to that group, you might definitely, if possible, find a way of actually communicating with me directly through Telegram, through my social media platforms. I will leave my Instagram there. I do not promise to reply to all, but I will try as much as I possibly can, because these are public platforms, guys. Anyway, let's go. We have that zone again, that gap, and it's not filled. Okay, perfect. Come back to it. Another one right here. I would like to consider all of these gaps right here. You guys have heard of fair value gaps and all that stuff. This is something that is in line with what we are speaking about. Now, if we take a closer look at this we spoke of the flip zone, which in this case, this structural high right here would be right here. Of course, we could take a buy right here, but we have to endure all of this. But in order to tighten or to lower our risk, to tighten our stop loss and to better our entries, how about if we mark this invalidation right here, and it's confirmed by this fair value gap right here? Look at how better our trade or our entry is in relation to just picking up a trade based on the structure alone. The structure alone is our friend because it shows us the overall direction of where we are supposed to be heading. But if we mix it with other conditions that are within the micros, we have a macro structure, which is all of this bullish movement. But within this bullish movement, it's not just a straight line. We have situations whereby it's bullish, then it corrects with a micro bearish movement, then it's bullish and it corrects, then it's bullish and it's correct, and so forth. Now, these micros are what we want to focus on so that we get an optimum entry, a nice entry that lowers our risk and actually favors us. Because the idea, I'll say this over and over again, it's not to become the best trader. It's to trade trades that are actually satisfactory, that are profitable and consistent, seeing movements that are repetitive. I have structure, a structural high right here, and right within that structure I have that gap again. Remember, we are just studying the market structure, nothing more, nothing less. Again, a structural high, it's right there. Let's pay close attention to the gap, and we have market coming back again to that very same zone. So we will create a method. We have it again right here, and we have a gap all the way right here. We have market coming back to fill or to renegotiate that price gap, that price difference that we spoke about when we were talking about the orange company with its mobiles and stuff, which I feel like it's a perfect example for what I'm trying to bring as I speak about structure. So today's video is not going to be long. It's simple, it's straightforward. Do this practice, identify invalidations and the gaps that are around it, structural highs and the gaps that are around it, structural highs and the gaps that are around it, and observe. Drop in terms of time frame so that you understand more, you know more. Then in the next video I will drop to a lower time frame, then we'll focus on what really happens and what conditions are we supposed to see, because there is a trading plan that I shared with some members, some of you guys. There is a video, I'll also leave it at the end of this video as a link, then you may just click it and you see some of the conditions that we look into when it comes to the lower time frame. But you really don't need to rush into that, because I will still get there and I feel like I will have to repeat that video, or I will just post it again so that it makes a whole lot of sense with this information. It's really good that I see you guys are actually making sense out of this. I can't speak to all of you on individual basis, but through these videos I communicate with you, and it's nice to actually know that they're actually real people behind the screen, behind the scenes, and it's nice. With that, I wish you good luck and great trading, guys. Peace.